Do you believe in V? V? Yeah. V-shape recoveries, guys. That's where we are today. Do you believe in this? Do you believe that we're never going back down here? That's the bottom. Look, I'm zooming on the daily because I really want to see the definition of those V's. And it's again, the weight of evidence. It makes your trading so much stronger. It has mine. It's all about reducing whipsaws. That means a whipsaw, you can only suffer it if you enter and then the price action goes against you right away before you have a chance to move up your sell stop, to break even. You're whipsawed. You want to remove those false signals, guys. So let's say we would have a close above the 200-day moving average, and now I'm out of the Ichimoku cloud, and then I say, okay, back into stage 2, or stage 3 for the index, and I'm gonna start playing stocks within it that are breaking out stage 2. Look, I'm not even looking at the monthly right now, just at the daily, even on the smaller time frames. You could use the weight of evidence on any time frame, just a stage analysis above a moving average, below it. Don't go long, don't go short. High volume on breakouts. All those checks, you add on to them. So let's just see. I want to see if this is going to go back down to retest, or you can indeed have a V-shaped recovery and then to the moon. But first thing, okay, I want to specify the V-shapes that we're going to analyze. A V-shape recovery below a break of the 200-day moving average, below a def cross, 50-week moving average going downwards. So if we get this type of scenario, I want to see if this ever happened that that it actually went back up, guys. So let's check it out. Check it out. Let's go back in time. V-shape here, but you're still in an uptrend. You still have you're above the 200-day moving average. It's pulling you back up. There's no need to go retest those lows when you're in an uptrend. You don't have that gravity. You don't have the weight of that top pattern bearing down on you. You're not below the moving average or above it. Same thing here. Low price action down, but the 200-day moving average bring it back up. Okay, 2015, 2016. Def cross or close, we broke down below the def cross, below the Ichimoku cloud. So all this looks great. And could have been here. Let's say we've been here closer today. Oh, Pat. Going back, we're not as high as we are today, but someone could say, look, I'm V-shaping. We're not going back down. No, retest right there. And then we got it to do it again. Price action went back up. Def cross. Price action going all the way down, like our December move. Price action starting to go back up. Didn't quite go as high as it did today. But what happened? You don't get a V-shape, you get a double test before you decide to go back up, guys. Right here in 2014, V-shaped. You're still in an uptrend. You're not doing the def cross. You're dipping a little bit below, so the V-shape is not happening in when the moving averages are starting to roll over. Let's go back here. You see how the 50-week moving average, the 200-day moving average are flat or starting to go down. You're not in that type of scenario. You're still in an uptrend, 50-week moving average way above, and you still got that power of the uptrend bring you back up. But I have other clues that I'll show you why this also, if ever you in the weight of evidence, that this you wouldn't wait for that to double test. That it's possible to have that V-shaped recovery there. And see, you have a whole bunch of these small V-shapes. Never, because you're in an uptrend. You have the momentum pushing you back up. Small dip below, but again, that uptrend bring you back up. So it's believable that you don't need a double test of these lows right here. Same thing here, below the 50-week moving average, but still in an uptrend. It's still above the 200-day moving average. There's no reason to think that you want to challenge that. And where are we back? Ooh, okay, here. Another def cross. This is in 2011. Okay, def crossing right before. And, oh, Control Z. Oh, what happened? Everything disappeared. Patrick. Sorry, guys. Let's move back. I inadvertently destroyed the SPX. 2011. All right, here we are. Patrick, clicking everywhere. Don't want that alert. Okay, remove that. That's what I want to do. So let's move it back here. Oh, December. Well, let's say it's our equivalent to our December pretty much. Oh, it's going down. Went back up. V-shaped recovery. No. Had to double test it. Try to go back up. No. Even have multiple tests. So never V-shaped and out back to the moon like some might think could happen right now. Actually, I had 1 test, 2 tests, 3 tests, never quite making it, 4 tests, and after that, then it decided to recover slowly but surely, and then moving up. So you had a whole bunch of tests down here of these lows before attempting to go back up, guys. And another def cross, another V-shape here. So we're below the 200-day moving average, below a def cross. So even here, you could say I'm below the 200-day moving average after going all the way down, going back up, then go back straight to the moon, went back, retest. And after that, went back down. And that's really after the after that def cross, and then after that price action come back up. So for this one, in case of doubt, I'll show you why this you would have been able to avoid that. Where's the other one that we weren't sure? Even this one a little further away. Say, Patrick, why I want to retest? Why can't I do a triple, quadruple test of that one? Well, let's go check it out after. And ooh, 2009 bottom. Okay, so this, you see, this is a V-shaped recovery, but way advanced. So the more you're advanced, just like this one here, the more you're advanced after the def cross, the V-shape is at the beginning. That's when we're looking for it. But the further it's happening down, you could have a V-shaped recovery, and you had one right here. And you could have said, oh no, I'm going to wait for another test. But eventually there's no other tests. And I'll show you again. I'll add the metric, my next indicator. This could happen at the end of a bear market. But when this V-shape happens at the top of a market, it's very unlikely that it's a V-shaped recovery after breakdown and then the first pullback never tests again. But at the bottom, it does happen. And I'll show you how to identify that. And let's just continue a little deeper in. And let's just see at the breakdown how this happened in 2000. Death cross, breakdown. Try to pull, okay, I'll do it like that. That's where we are pretty much in December. Breakdown here, try to go back up, didn't quite make it. Oh, retest. Lows, retest, try to go back up, didn't quite make it. Retest even lower. And then, okay, let's say this, you want to compare this to our January month. Strong pullback. All the way to 200-day moving average. Okay, this is not a V-shaped recovery because it did already a multiple retest, but let's say you consider this a V. Why can't this go to the moon? Well, you have the gravity, you have the 200-day moving average bearing down on you. and it did not V-shape. It went to retest, even go lower than previous lows, and then you're in the downtrend, guys. So that's why V-shaped recoveries, they don't happen unless you're at the bottom. And how do you know you're at the bottom? Oh, let's add unemployment rate. So employment rate, that's like me going out, starting to look at other, like Stan's weight of evidence. Now I started adding economic data. And when the unemployment rate gets to really lows, starts flattening and starts going back up, you're starting to end the bull cycle. So here divergence is starting to happen with the right here. Divergence starting to happen with the price action, unemployment rate starting to gain. So that's the context of when you see that, when unemployment rate is at the bottom and really at ultra low levels and starts climbing up, that V-shaped recoveries don't happen. But what happens when you go down, the unemployment rate skyrockets, and when you have unemployment rate that has been going in an uptrend, then I believe that you can have V-shaped recoveries, because it's at extremes that you have the reversal move. So unemployment when it's high, very high, getting above these high levels, or even here, see it's starting to flatten a little bit. When the V-shape's happening all the way up here, starting to flatten. When that starts rolling over, and when you have the weight of evidence that you've already been going down from the top, this is possible when this is happening. When you're extreme levels, unemployment rate are starting to roll over, it wants to go down. When you have a V shape here on top, but the unemployment rate at ultra low levels, this is more signal that you're at top. And instead of declining, rolling over, rolling down, it's actually, oh man, it's actually starting to incline. Man, that thing keeps highlighting. So let's look for today. So now we have the unemployment rate starting to go down. So it's going back on its downtrend. And for me, that means the bull market is starting to go back up. All these V-shapes are possible. So anything below 200 moving average, it is possible that you won't have always retests until unemployment rates increases. All these recoveries are all possible. You're in the uptrend until you go back to ultra low levels. Even here, you're still going down. Oh. And as long as you keeps going down, V-shaped recoveries are possible until the unemployment starts going upwards or is at ultra low levels. And now we're sub 4. These are ultra low levels at, 30 years. I don't know how long we haven't had these unemployment rates below at 2.380, very, very low, 370. So at these low levels, I don't see a V-shaped recovery and then employment going back down, going even lower. This is the end of the cycle, the economic cycle. So I don't trust that we could V-shape from here like we had at the bottom. So this is a type of behavior I see that it's possible, like you saw at the bottom of a 2009. But right here happening below a def cross, below a 200-day moving average, going downwards. I could even go on the monthly chart. You still have that weight of the 12-month moving average, all that overhead resistance. And especially because you're at the end and you have there's no unemployment rate, but there's a whole bunch of other indicators that we're ending the economic cycle. The pressure is going to really go down, guys. So I don't trust this at all, that this could continue go back up to previous highs. If it pierces a little bit, it could go a little bit higher and then go down, give you really a final gasp of air above that 200-day moving average. But by the end of the month, close below that 200-day moving average and resume at least for another retest of those lows here. And then when the 200-day moving average starts going down, going back up, then going back down, and then creating lower lows, until the unemployment rate starts reinflating. Oh, it's going bad. It's going bad in society. Everything's going down. And until it goes back to these higher levels, 6, 7, 8, 9, and starts rolling over. And then when it starts rolling over, wherever the price action may be, and then if we have a V-shape at the bottom, then I might believe that that's a V-shape, that we won't retest those lows and we're out of it. But it's always weight of evidence. Look at the most telling indicators, add that to your toolbox, and FOMO, fear of missing out, will not even cross your mind, because you'll know that the environment has more risk, more downside from here because of this here than upside. Because I just don't see how the upside could be maintained while we're ending the cycle, the economic cycle here, approaching a recession. This is unsustainable. And there's no examples of this, a V-shape up here. I'll have to dig, but this is my preliminary work. They're using an unemployment rate, combining it to V-shapes below def cross, that this can or has happened in the past, guys. But it does happen here at these bottoms right here, guys. When the unemployment rate has actually risen back up, started rolling over, and started a new bull cycle, guys. All right? Ooh, okay. I'm going to try to refine that, but keep observing, keep using your curiosity, and back testing and adding those tools, guys. All right? Hope you enjoyed this one. Thanks for watching.